Welcome to the Tax Sale Podcast, where tax sale investing is made easy. My name is Casey Denman. I'm a tax sale veteran. I'm the leading tax sale expert. I'm the author of the Tax Sale Playbook, founder of the Tax Sale Academy, and I am your host right here on the Tax Sale Podcast. Thank you so much for joining me on today's podcast episode. As always, this podcast can be found on a number of different channels, including Spotify Video, YouTube, and wherever else podcasts can be found. So make sure you subscribe to us on your favorite podcasting platform by visiting taxsalepodcast.com. And also, this podcast is completely free through and because of the Tax Sale Academy, which you can learn more about by visiting taxsaleacademy.com. All right, let's get started. So over the last 20 plus years, I've learned quite a bit about the tax sale business simply because of experiences. And I continue to learn through this day. Now, on top of that, I also have the privilege of educating countless new investors through the Tax Sale Academy. I've also received thousands of messages, DMs, and emails from many people around the world who have listened to podcast episodes just like this one, who have watched YouTube videos, listened to interviews I've done, and listened to my trainings on various other platforms. These types of responses, these types of emails and questions have provided me with an in-depth understanding of what a lot of new investors struggle with. They provided me with a great understanding of what new investors tend to overlook. So on today's episode, I want to discuss 5 things that most new tax sale investors overlook when they enter this business. Each one of these has the ability to cripple and perhaps even financially ruin you and your business. This is a very, very important episode. Let's get right to it. The first one is something that I've preached about many, many times, and that is property-specific issues. The real estate that you are buying is your investment. That's pretty easy to understand for most people, but the importance of that statement is rarely taken to heart. If you want to eliminate all risks in this business, you must know everything possible about what you are investing in, including the process itself and the property. Therein often lies the problem. I hear stories daily, and they start with sentences like, "When I researched, I missed this," or "I forgot to check on this and that happened," or "I did not know I needed to look that up," or "the photos online weren't accurate." I could go on and on, but the point here is that the property itself makes up your entire investment. Therefore, you must know everything possible about it. You simply can't go out and buy a property and hope it works out. Looking at just the property assessor's report and maybe a Google image, while that might be helpful, if that is the only thing that your research entails, I can guarantee you, you are destined to fail. Now, this is not a research episode, but I want you to understand that nearly all mistakes that I see in this business come down to somebody who failed to research a property thoroughly enough. It's as simple as that. An auctioneer in a state that I frequent has a rather firm quote that he uses. He'll go through all the rules, he'll say something along the lines of buyer beware, and he always ends it with this: know what you are bidding on. And I want you to take that to heart. That single statement will save you quite a bit of headaches in this business and potentially a substantial amount of money. One of the next most overlooked issues revolves around the title of a tax sale property. So I remember the first time that I bought a property at a tax sale. I bought it pretty cheap. I lined up my buyer. I was going to make a whole bunch of money. So I sent that contract over to the title company that I was using to process the title insurance, to handle escrow, and to close that transaction out for me. I flipped it very, very quickly, and I was super excited. But after a couple of days, they called me back. They said, "Casey, this is a tax sale property. We can't insure this property." So in other words, they would not write a title insurance policy against the property. So I had to educate myself on clearing titles. And of course, in the short term, that meant I was not going to get that massive payday that I had been expecting and counting on. So if you're not familiar with title insurance, most properties on the traditional market, if you see properties on Realtor.com or Zillow.com, those properties are going to be sold with title insurance. This means you have insurance from a third party that says the title is clear. That way, the buyer does not become responsible for a lien or other title issues that the seller created but did not take care of. The last thing you want to do is buy a property only for a bank to come back a year down the road and say, listen, you still owe us $100,000 for the mortgage that exists on this property, or we're going to take the property from you. That was not your problem, right? And with title insurance, it helps you to avoid this. The issue is that a tax foreclosure creates a break in the chain of title that the title insurance companies are not comfortable with, and therefore they won't insure the title to that property. Now, there's multiple ways to deal with it, but you can either go through the various processes to get title insurance, which takes time and or money, or you can sell the property with an as-is title at a significant discount off of its fair market value. New investors often overlook this potential issue and become confused and frustrated when they're not able to sell the properties like they can most other types of real estate. So be sure to check out my other episodes related to tax sale titles and title clouds, and take the time to educate yourself on the various types of deeds while you're at it. The next commonly overlooked issue are county, city, and governmental liens, which will all stay with the property and become your responsibility to deal with. Now, when I say that, for whatever reason, so many people immediately think IRS or Internal Revenue Service liens, and they discount everything else. Yes, IRS liens do stay with the properties as well, but they're usually much less of a concern despite how intimidating they might sound. But they do stick with the property for 120 days while the IRS makes the decision whether or not they want to take that property and put that asset towards the delinquent taxpayer's income tax debt. If they decide to do that, they'll reimburse you. So it's not that big of a deal. But here's the fact of the matter. It's rare. It is extremely rare that the IRS will come back and want one of these tax sale properties. In fact, I've never had it happen to me in over 20 years of investing. And again, if it does happen, you're going to get your money back. It's not that big of a deal. But if they don't take the property in that 120-day window that they have, the lien simply drops off. But again, the IRS is probably one of the least concerning liens when it comes to the governmental liens that stick. The more common and costly types liens are going to be your county and city liens for things such as weed violations, dangerous building issues, trash cleanups, and that kind of thing. These can easily exceed $100,000, $200,000. I've seen these liens total over $350,000 on a single family house before. Here's what happens. The former owner does not pay their taxes, and they also decide they don't want to take care of the property any longer. It becomes an eyesore. So a code enforcement officer goes out there and they write a citation, just a little ticket for a nominal amount. They say, listen, here's a $100 ticket, and we also want you to clean up your property. They give them 30 days, they don't clean up the property, and they probably don't even pay that ticket. So they apply a little bit more pressure, and they do this with another citation that comes with a deadline. They say, here's another citation for another $100, and oh, by the way, if you don't fix this issue, if you don't clean up this property within 30 days, we're then going to start issuing a $500 per day fine. Let's say the seller ignores it again. Maybe they don't care. Maybe they're deceased. Maybe they disappeared. Whatever the case is, those fines begin to stack up for, say, a year while the property runs through the process of tax foreclosure. So now you go to the auction. You've got a house that you thought was worth $30,000. And you buy it for $1,200. You think you scored the deal of a lifetime. But guess what? $500 per day times 365 days is over $180,000 worth of fines, worth of a lien from the city that you are now responsible for. Now, I'm not a mathematician, but that is probably not going to work out good for you. Obviously, there are ways to search for these liens ahead of time, and there are strategies to reduce these liens if you did happen to buy one. But nonetheless, this is a big, often overlooked and very costly issue for many new investors. So watch out for those governmental liens. The next overlooked issue are local ordinances laws, and requirements. And there are many different angles that we can view this one, but the important thing here is that you understand that just because things are done a certain way in the area that you're used to does not mean they're done that same way in a new area that you're going to invest in. Case in point, one of the first places that I invested out of state was a northern state. Now, I'm from Florida. Keep that in mind. I bought properties in the fall, and by January, I started receiving notices and eventually citations for not shoveling the snow off of the sidewalk in front of the properties that I had purchased. Again, as a Floridian, I had never heard or even thought about such a thing. The same, of course, can be said for weed violations, vacant house ordinances and registrations, out-of-area owner registrations, sidewalk cleanup ordinances, trash ordinances, and the list goes on and on and on. The point here is to educate yourself on what is required and what you're responsible for as a property owner. Now, along those same lines are the laws that impact the real estate that we buy. It's not uncommon to see properties on a tax sale list with major issues. For example, that beautiful lot might not be buildable because of some random law that says you have to have a half of an acre in order to put a well and a septic in place, and you only have 0.4 of an acre and there are no city utilities there. Or maybe it's the setbacks that don't allow a property to be buildable. Perhaps it's a property where it does not meet the minimum square footage requirements to build. Maybe it's a dilapidated house that you intend to knock down and rebuild, but the county won't let you rebuild in that spot for whatever reason. These are all things you must know and research prior to investing. And the last one I want to discuss today that is often overlooked are the tax sale laws. Wow, this one to me is just mind-boggling. The tax sale laws are what allow us to operate as tax sale investors. The real estate we buy is the product. The laws are the rules. Everything else is simply strategy. If you don't want to take the time to read the laws that apply to the state you are investing in, then you are probably going to also be too lazy to succeed in this business. The little bit of time it takes to read those laws, to analyze those laws, and to highlight the important ones will pay you back in dividends over time. Want to know what fees will stick? Read the laws. Want to know the notification requirements? Read the laws. Want to know the type of deed that's provided at a sale? Read the laws. Want to know if a sale can be canceled for any reason? Read the laws. Want to know what time of the year the sales are going to be held? Read the laws. Want to know who handles the tax sales in your area? Read the laws. Outside of simple strategy questions, more often than not, the answer to most of your questions is read the laws. Sure, they are not fun to read, I get it, but they are extremely educational. But it seems like 99% of new investors don't care about the laws. They don't read the laws. Sometimes they don't even realize that laws exist that allow us to do what we do. These laws allow us to operate and they protect us as investors. I cannot tell you how many times I've had to quote a section of law to an attorney, to an HOA, to a mortgage company, to a title company, to other investors, and to so many other people. Do not overlook these laws. They are so important to our business. So there it is, 5 commonly overlooked tax sale issues: property-specific issues, title issues, governmental liens, local ordinance and requirements, and the tax sale laws and how they impact you as an investor. As I mentioned at the beginning of this episode, each one of these has the ability to cripple your business if you do not fully understand them. So please take the time to educate yourself on each one of these topics. Watch my videos here on YouTube, listen to my podcast episodes, grab my book, join the academy, whatever you have to do to learn so that you can avoid unknowingly putting yourself into a horrible financial situation. And that's all I've got for today. I truly hope that you've enjoyed this episode of the Tax Sale Podcast. If you did enjoy this episode or any of our episodes here on the Tax Sale Podcast, please do me a huge favor and leave a positive review on whatever podcasting platform you're listening to us on right now. This podcast is completely free. I don't charge a listening or membership fee or anything like that for these podcasts, but your reviews really help us out. And they might even serve to pay it forward to somebody else who learns about this business simply because you took the time to tap that 5-star review or to leave a positive feedback comment. And as always, if we can be of any additional help, be sure to check out our website at taxsaleacademy.com. Hey, take care, folks, and make it a successful day. We'll see you next time right here on the Tax Sale Podcast. Bye-bye.